The revaluation of gold. That's going to be a topic, Andy, that you and I should. So you just told me off mic that we should be talking about. You mentioned $20,000 gold, $120,000 gold out after revaluation of it. It's going to be a hard word for me to pronounce, but it almost sounds like too much of gold buggery. But I'm interested to see what you're going to say about that. I also want to ask you about the Chinese shenanigans, if you will. Are they buying? Are they not buying? Have they stopped? What does that mean? I want to ask a bunch of other things, macro related, and I want to ask about where gold, but also where silver is going to be going. So lots to talk about. And then for people listening right after this conversation with Andy here, I also have a new BC Gold and Copper Explorer to interview. So timestamps probably on your screen right now, but also just use the timestamps to navigate this video. They're always in there. So yes, loads to go through today. Actually, not as much as typically, but still a lot to go through. And Andy, again, since the last time we spoke, there's still a lot to catch up on. Which, by the way, was only I think last month when I met you in Florida. So obviously, thank you for being here, of course. But also, what in the world is happening out there? We're experiencing quite a lot of volatility in gold that makes it hard to just keep buying, as they like saying, but it's even harder to time the market correctly. So yeah, talk to me. What's happening out there? What are you paying attention to?
Well, there's a lot happening out there for sure. I think you're seeing things spin at a level the world has never seen before.
Hmm.
But when we talk about, what's happening in terms of, look, you can talk about the unwinding of the carry trade. You can talk about how all of the Western markets are trapped. Let's go back to 2019. The United States tries to uh, implement austerity and to normalize their balance sheets and to raise interest rates just a little bit, and it starts to break at the seams, and we see the repo market crisis. So we pivot and back off. We can look at the United Kingdom, who tries to implement austerity and raise rates a little bit, and it blows up the pension fund. So they pivot and back off. We can talk about how Powell tried to implement austerity and raise rates, albeit 500 basis points in the span of a year, which was a little aggressive after 20 years of suppressed zero bound interest rates. And it started to break up the banking system. So we pivoted and backed off. And now you look at Japan, who, after letting their currency literally plummet and interest rates at or near zero for the better part of over 2 decades, well, they try to just do a little bit of austerity, raise interest rates, strengthen their yen, and it blows up everything from Singapore, Korea, South Korea to the United States. And so, what I take away from that, of course, they've pivoted and backed off. The comments from the finance minister, Japanese finance minister, we're sorry, we'll back off. We won't continue to strengthen. And then you have dum-dums like Jeremy Siegel, who come out on CNN and begging for a 150 basis point decrease at the behest of an emergency meeting of the Fed. But wouldn't that just unwind the carry trade even more? Because it's not just the yen going stronger or rates going higher in Japan, but also rates going lower in the United States. So it's six of one, half dozen of another, and it just goes to show that we are trapped. That, on one hand, we're addicted to the stimulus, to the low interest rates, and to the easy money. Wall Street is for sure. On the other hand, we're destroying the currency and we're inflating and creating debt at a level the world has never seen. We are adding $100,000 of debt per second, three, four, five, and keep on going 24/7. That's $1 trillion every 100 days. It took over 200 years to do that. From a big picture, the West is trapped. They're trapped between inflation and austerity. Then they will do what all governments have done, and that is to continue to inflate their way out of this mess. Because the minute any of them, whether you're talking Japan, the UK, the United States, any of these Western entities that are drowning in debt, and it's because of messing with Mother Nature. You can't mess with Mother Nature, right? So Mother Nature is the interest rates. And if you mess with Mother Nature and you distort asset prices, there is a bill to be paid. In 2008, at the end of the great financial crisis, they should have let the fire burn. They should have let all of these companies, instead of bailing them out, they should have all just gone poof. That's what capitalism is. You there's consequences to be paid when you come in and you intervene like this. You just make the final outcome that much worse. In '08, the Fed's balance sheet was 800 billion, and at the a year ago, half a year ago, before they started doing a quantitative tightening, it was 9 trillion. They added over $8 trillion in bond purchases in US treasuries or mortgage-backed securities, which dropped interest rates down to all-time lows and created these distortions, these misallocations, these anomalies in price. And price discovery was obliterated, and price discovery will come back on the back of Mother Nature. Here I am. And when interest rates and asset prices find equilibrium at the behest of Mother Nature, you see a bill to be paid. And the minute they see that bill to be paid, oh, we're sorry, and they run the other way. So what does it mean? It means eventually this whole thing breaks far worse than it would have broken a long time ago. And there's so much over leverage, and there are so many distortions and so many misallocations that we haven't seen the end of this yet. In fact, this is just a glimpse, just a little bit of interest rate increase, and the whole damn thing breaks apart. Um, that's walking on very thin ice, if you ask me, and I would tread lightly if I were on said ice.
I made a note recently in one of our reports that so far it's really it's been quite like filling potholes with dollar bills. So when every just to kind of smooth over the ride a little bit, but at a certain point we're going to come to the end of that road, and the end of that road might be on a cliff, but there's not going to be any money left to build the road footer, to build a bridge or whatever, and there's no turning back either because we didn't fix the potholes. We just filled them with dollar bills, and that's kind of how everything feels right now. But what does that mean at the end, though? I mean, what does it mean once once the economy hits that cliff? What does everything look like at that point? And how can I even see it happening right before it happens?
Well, if you are in the United States, you won't see it happening because, you know, our media doesn't do a poor job of telling us what's happening. They do no job of telling us what's happening. And you can't get out of the way of what you don't see coming. But to me, it's what precipitates that final crash. There's a lot of possibilities, but what it simply means in its purest form is that if you're not a contrarian, you're damn well bound to be a victim. And if you hold all your assets in Western-based currencies and Western-based traditional currency instruments, you're damn well destined to go broke. And I think it's time in unconventional times like this, globally on every level, it's time to think unconventionally. And when you realize that last year, 2023, the first 6 months of the year was the most gold that the central banks have ever purchased ever, and only bettered by this year, the first 6 months, the most gold that the central banks have ever purchased. Now, let's just break that down for 1 second. Who are the central banks? Well, they're the wealthiest players in the world, and more importantly, they are the most well-informed players in the world. The big money always front runs the markets, always repositions ahead of the little guy. And these central banks have been using the suppression of the COMEX and the LBMA, the brain dead suppression, to stand for delivery of all of the world's commodities, not just precious metals, base metals, soft commodities, wheat, corn, soybeans. The Chinese bought the LME, the London Metals Exchange, not the LBMA. The LME does the base metals, copper, zinc. Their Belt Road Initiative, all of the commodities in the 150 countries plus that are in the Belt Road, they're all under industrialized and resource rich. This is all about commodities and shedding the assets of a broke country who is insolvent and has weaponized the system. Where we, Janet Yellen, can say to CNN, we're okay with Xi and Putin being friends, but if Xi gives a penny to the Russian war machine, we will sanction their companies, their banks in Beijing itself. Never mind that we've given $160 billion to the Ukraine with no congressional oversight. Stinger missiles and F-16 jets, we don't matter. We're the world reserve currency. That's running very thin with a lot of countries. And so this is a different time where these countries look at treasuries as an example. And we can look at the European Union treasuries or the UK or the United States. And in every case, they're broke nations selling debt and being viewed as an asset. Strange theory if you think about it. And it has a very small sliver of historical precedence in time. When you look at gold, it has outperformed the 10-year treasury 2 to 1 for the last 25 years. But what it also offers is no counterparty liability if held in your own possession. Can't be sanctioned, can't be confiscated by a government who much of the world views is as hypocritical. So I think we are at the foothills of a change. We are very close to 130% debt to GDP in the United States, and there's never been a country that crossed that line and came back without either hyperinflating or outright default. In fact, there used to be a time when you cross over 100% debt to GDP, you're considered a banana republic. And of course, if you have questions surrounding your election and your judicial system, well, then you're really a banana republic. With that all being said, let's just hope we don't go down that hole. But all I'm simply saying to you, in my mind, it's time to think like a contrarian. It's time to be a contrarian. It's time to be unconventional and to realize that a world that had witnessed interest rates fall at a 45-degree angle from 1982 to just recently lived through the greatest market boom and prosperity in common assets, stocks, bonds, real estate, that the world may ever see again. I don't know. I mean, it was amazing. A lot of wealth was created, but a lot of that was done on the behalf of keeping interest rates artificially low. And the distortions that has created, especially towards the end, along with all of the money injected into the system, has created substantial anomalies that when they try and find equilibrium with interest rates, it will be a lot of pain that the whole Western system is going to face. So yeah, I think it's time to trust your gut, don't follow the herd, and realize that, things are changing, and maybe not for the best for the Western system.
It almost sounds like you're not too bullish on the US dollar. Who would have thought?
Yeah, I'm not bullish on the US dollar at all, at least in its current form. One thing that could help would be, and I don't say this, I mean, look, I think the Western system will have to acknowledge gold the way that the Southern Hemisphere is. And they have. The IMF wrote a report beginning in 2023, said gold as an international reserve currency, a barbarous relic no more, question mark. And then Kristalina Georgieva, the head of the IMF, which is very Western friendly, said any CBDC that is not pegged to something would be considered fiat. Well, what did the BIS do? They reclassified gold as the only other tier 1 reserve asset. And you look at what just came out of the BRICS meeting in Novograd, where 59 more countries have formally applied. Dilma Rousseff came out, the former president of Brazil, the head of the Bank of BRICS New Development Bank, said we've agreed in principle to a new settlement currency called the unit, which will be traded over Project M Bridge, which is 40% gold backed. The unit would be redeemable. And Project M Bridge is a cross-border payment system that is not compatible with dollars. It was developed by China, Hong Kong, Thailand, and the UAE. It is uses the ability, like a crypto system, to trade central bank digital currencies amongst one another with no interference by West. And they said, in principle, we've agreed to trade the unit over it, which, again, 40% gold backed, 60% BRICS plus currencies. And they have a meeting in September for it, and in China. And if it's ratified and they roll it out to the big meeting in October, you're talking the end of demand for holding US dollars and treasuries by the majority of the world. So when you talk about how things could quickly go from, slow moving train to falling off a cliff, as you mentioned, it could happen real fast. And that would be the acknowledgement that there's a new settlement currency embraced by the majority of the population of the earth for energy that is gold backed and is not the US dollar. So, yeah, I think things are getting interesting for sure.
I'm glad you're bringing up, and I do want to go back to the interest rates and see if maybe there's going to be an emergency rate cut. What are we going back to ZERP or not? But I'm glad you're bringing up China and central bank gold buying, because that's a topic that I've been following over the last 2 weeks. The last 2 months is what I mean, not 2 weeks. But so China central bank self-reported that they stopped buying gold bullion in May, I believe, and so they didn't buy any more for the months of May, June, and July. It seems like they've stopped, at least on the surface or by the looks of it. I know you probably don't agree with that. What do you think is happening there?
I think it's fugazi. As a matter of fact, I think it's total BS.
Hmm.
I could give you a whole bunch of more four-letter acronyms for what I think of it, but let's just go back. I've been doing this longer than anybody in this industry, just about. I've been, doing this since I was 19 years old. 34 years I've been in this industry, and most of my career, the numbers that the Chinese reported in official gold holdings were somewhere in the 1,200 ton range and never changed. They are the largest producers of it in the world, mining between 300 and 500 metric tons, to the best of our knowledge, per year, and have been for a very long time. Everyone would say my whole career, you can't believe the numbers the Chinese are saying. They have way more than they say. The head of the IMF just came out and said this, that they believe that they're massively understated. The lead analyst for Bank of Montreal said China's numbers are massively understated. And let's talk about the United States for a second. Why is it that we supposedly have 8,330 metric tons of gold in the Treasury, yet every time Ron Paul has voted to audit the Fort Knox, which is our gold, it's turned down? Why have we never updated our numbers? And what happened to Gaddafi's gold? And what happened to the 12 billion in gold that the Ukraine sold to fund the war? And what happened to Saddam Hussein's gold? What I'm saying is it doesn't behoove anybody, but let's talk about China for a minute. It doesn't behoove any of these countries to say how much gold they really have, especially if we are going to have gold revalued. And I believe we will, and maybe we'll have time to talk about that. But all
How
right, as
much gold?
far
I'm
as
sorry for
China is
interrupting here, though, but you kind of opening a door there for Fort Knox. How much gold do you think there is in Fort Knox? Is there any?
I don't know. I mean, why not audit it? A lot of people think they've leased it out to hold down the price. I don't know.
To whom?
If you have nothing, the old theory would be, if you have nothing to hide, then show me. Your girlfriend cheats on you. You think, if you have nothing to hide, show me your phone, right? And I mean, wouldn't that be what you would say? And okay, here, fine. Here's my phone. Look at my text. Look at my emails. Look at my sent emails. I got nothing to hide. Great. Instead, no, we're not going to show you Congress representing the people. I don't know. I find it to be disconcerting for sure. But look, before I even answer, like the way China does things, and I'll explain to you that it's not true. But like I just did 2 interviews with mining executives who have both independently told me that China is going all around Latin America and buying up all the silver concentrate and doré bars, and even unrefined ore, that silver unrefined ore, and shipping it, paying double what the West will pay for it, and shipping it back to China and refining it there. And all of this silver there. And how many people even know China is the second largest producer of silver in the world?
Hmm.
In the world, behind one is Mexico, two China, three, I think Peru. But they're flying all around the world, all over Latin America, in these underdeveloped countries, and buying up the silver concentrate and doré and ore, shipping it back to China and refining it. Because why? Because it's not taken off of an exchange, so no one sees it. Doesn't affect the price. They have no idea what's going on. If you look at the commercial banks that work on behalf of the PBOC, when they're buying gold from refineries and in South Africa and in Switzerland, and they're doing it by proxy for the PBOC, they're not telling the IMF how much gold that they bought. This is under the table. I mean, it's for them, or is it for the PBOC? And when it's a convincing argument, they say we stop buying for a few months, then they lower the premium on the Shanghai exchange, which has been elevated for a long time, to really exacerbate it. And look what happens: the Western price drops. They've been producing 300 to 500 tons a year since 2000. Why? That alone is way higher than the 2,600 metric tons that we're supposed to have. But let me just get down to it and read this to you. Because the bullion banks take care of gold transport for the PBOC, the shipments from London to Beijing are disclosed in UK customs data. The customs data reveals that the PBOC continued to buy gold in May. When it communicated to the market, it discontinued buying it. And that's from Koos Jansen, who's a hell of a writer. And I believe it 100%. I said it long before I read that article that was written on the 29th of July, because everything that they've ever done is, and it wouldn't do them any good to, for 18 months, they start telling us that they've been buying gold, but they've been buying gold for 18 years and a whole lot longer than that and a whole lot more. And I do believe gold will be revalued, and it will, if indeed, in every central bank, including where you live. Do you know the name of the account where gold is held on this, on your on the Belgium central bank balance sheet, or in the U.S. central bank balance sheet, or any of in Europe? It's called the gold revaluation account. Okay, and the head of the Dutch central bank keeps saying this, keeps talking about, well, I know that we're not allowed to use the gold in the gold revaluation account to offset a liability at this point, and it's only valued at $35 an ounce. It's still the Bretton Woods number in Europe. But he keeps talking about the fact that all we really need to do is revalue the price of gold and make our balance sheet good. You just had Senator Loomis from Wyoming speak at the Bitcoin conference right after Trump spoke. Trump said, I want to create a strategic Bitcoin reserve fund for the United States. Senator Loomis came up and said, I've drafted a bill to do just that, and to fund it partially by revaluing the Federal Reserve's gold held in the gold revaluation account. All they would need to do, if they made gold $20,000 an ounce, it would add $5 trillion to the Treasury General account, free and clear. And all Janet Yellen would need to do with no congressional approval is tell Jerome Powell to do so. They make it $120,000 an ounce. It benefits every single country on the planet who all stockpiles gold, and now their debt is paid off in relation to the assets that they have. At least their balance sheet is perfect. So could it happen? Could it go higher than anyone thinks possible? Well, if it does, then it wouldn't make sense to anyone to disclose how much gold they are feverishly accumulating and have been, using the brain dead suppression of the LBMA and the COMEX to run cover for draining the exchanges of all their commodities at subsidized, stupid Western prices, which support the illusion of a strong bond market to the EU and the United States and strengthened currency. It's a bunch of crap. And they are like jiu-jitsu, where you use your opponent's leverage against them. That's what they're doing to us. They see the game. I'll give you one more example of why I know this to be true. Two, one, the head of the Shanghai Gold Exchange in 2015 said, when China is allowed to speak at the table, the real price of gold will be known. Two, they just developed the BRICS Grain Exchange, and the person running the BRICS Grain Exchange said, we produce and consume more of these commodities than the West does, yet all the prices are set on the COMEX, and this will change that. So what I'm getting at is that when you realize that over the past 200 days, the combined volume of the Shanghai Gold Exchange, both the gold exchange, which is cash and carry, give me the money, give me the gold, goodbye, and the Shanghai Futures Exchange, has exceeded that of the COMEX. It's increased by 200%. And what that really means to me is that now Shanghai has the second most volume on the planet in their metals exchange, only second to the LBMA. When all of the Western gold and silver has been delivered at these subsidized fugazi prices, that these countries who are pretending to stop delivering or accumulating gold so that the West is stupid enough to let the price drop so that they can keep on buying it at a subsidized price, and the import-export records show it, and their proxy banks were buying it on their behalf, hand over fist. When all of the gold that is no longer, no one will sell at those prices. You will see the Shanghai Exchange, the Moscow Exchange, the Dubai Exchange. They'll take over from the West, which will be viewed as a Ponzi scheme, where the LBMA can trade in silver, 290 million ounces of silver a day and 28 million ounces of gold per day. But yet they say that those numbers are 10 times understated because they only show the final settlement numbers. That means they're trading almost 3 billion ounces of silver per day. That's 3.5 times annual global mine supply, and 200 million ounces of gold. It's all paper. And so what the West is doing to maintain this illusion, the East and the South are saying, thank you very much, we'll stand for delivery. And you can see it as clear as day over the last 3 years. They've been draining the LBMA and they've been draining the COMEX and using this suppression to do it. So gold will go higher than anyone thinks possible. The Chinese think in terms of decades. We think in terms of seconds, and they're using that to their advantage. So not for a second do I believe they stopped buying gold, and they probably doubled down on it. We're dumb enough to believe that they stopped.
What do you, the concept of revaluing the gold is very interesting to me because Don't understand it at all. Like, how will that work? Maybe what conditions do you think are going to have to be in place for central banks to actually go into? It seems radical. That's why I'm kind of struck by
Well,
that
why is
assumption
it
there.
radical? I mean, look over my shoulder here. I know it's a little blurred, this camera setting, but that's President Roosevelt and the executive order he used to confiscate gold in 1933, where he immediately devalued the dollar by 40%, revaluing gold. It's been done before. It's held in all of these counts in the revaluation account. So if every central bank in the world owns gold and has been accumulating it over the last 6 months more than any time in history, only surpassing last year's first 6 months, central banks have been buying it. So if you revalue gold, you just simply, I mean, look at China. They've been pricing silver $4 an ounce higher than COMEX and the LBMA. That's a form of revaluation, because anything that is able to be bought here and delivered there will do so. That's arbitrage. What if all of a sudden we say gold is 10,000 an ounce and everyone across the globe sells us their gold? We paid 10,000 an ounce. That's what it's worth. What if they all say, yeah, I like that idea, because now all of a sudden their balance sheet, which is massively indebted, can be offset with their gold holdings, which just went way the hell up. And now your balance sheet is perfect. So the Fed always talks about, or people always say, well, there's two options. You can inflate or you can default. All governments have chosen inflation over default, and that's what they typically do. You can default, that's option two. Been going with option three for 4 years. I've been saying there's a third option, that's to find a villain. I'm going to give you the fourth option. But I've talked about, you sign an executive order to go green. You have a lead economic advisor, Jared Bernstein, who has a degree in music and a master's degree in social work, to be your lead economic advisor. And his platform is to lose the reserve standard. That is a privilege we can no longer afford. So you weaponize the dollar, you create by against Russia and the treasury market by sanctioning all these countries, stealing their treasuries, making the whole world say, what the hell do we want anything to do with them? Because not only will they steal our treasuries and our assets if we do not align ideologically, even though we believe they're worse than we are, but they're creating $1 trillion of debt every 100 days, 100,000 every second. They are 35 trillion in debt, plus 150 trillion in debt in Medicare, Medicaid, Social Security, government, military pensions. They're broke, they're insolvent, they're hypocritical, they'll sanction. And then look what's happened to their country. We question their elections. We question their judicial system. Their immigration system's a mess. Their inner cities are being overrun and they're lawless. What has happened to this once great country? You put it all together, and yeah, you can lose your reserve standard just like that when you realize all of these countries are joining the BRICS, including Saudi Arabia, including all the OPEC countries are on the Belt Road, every one of them. So what happens if they all say, we don't want to hold dollars which are being destroyed in value. We don't want to hold treasuries which are also being hurt by rising interest rates, but also by sanctions and confiscation. We don't like the fact that the world reserve currency has the prerogative to steal and weaponize. So, and you sign executive order to go green. So the fact that every country's had to hold dollars for 50 years to buy oil has created a synthetic demand for the dollar. And you notice the Saudis did not re-up the exclusivity deal a month ago. Well, we won't stop taking dollars, they said, but we're going to take other currencies too. The G7 meeting that was in Italy, the Crown Prince was invited. He didn't go, but he sent his finance ministers to the BRICS meetings, where they announced, in principle, a new settlement currency called the unit, which will be backed by gold and traded over Enbridge, which Saudi Arabia just became a full participant of and is not compatible with dollars. So everyone dumps dollars in treasuries at some moment, and that inflation created by all of those dollars that have been held for 50 years hits our shores, and inflation skyrockets. The only thing that interest rates can do at that point is go to the moon to compensate for the loss of purchasing power. Your currency dies. You can't have 30% inflation and 5% interest rates. Your currency's dead. So interest rates spike, stocks, bonds, real estate, the banks and the insurance companies, boof. It's the Klaus Schwab moment. And those sons of bitches did it to us. They did it to us. And the American public is just dumb enough to believe it. Well, that's option three, find a villain. Option four, revalue gold to a massive number. Every $4,000 increase based upon the 261 million ounces we supposedly have is $1 trillion free and clear in the Treasury General account. Put it at 120,000 an ounce and you've paid off your debt. In essence, you have the ability to do so immediately. Your balance sheet's even. and you issue a new central bank digital currency pegged to gold. And if you realize that the IMF says any CBDC not pegged to something is fiat, gold is the only other tier one reserve asset. The head of the Breakthrough Development Bank says we've agreed in principle to a new settlement currency pegged to gold. I mean, look at the crumbs, man. The hard part is grabbing all those crumbs and trying to make a cookie. But the crumbs lead to the fact that the most powerful people in the world say gold is going to underpin a new system, whether it's in the West, whether it's in the global South, or each have their own. I don't know, but I do think that gold is taking on a whole new image amongst the elite, and not the investors, but the people that pull the strings. And I think that's the only way you inspire trust in a system that the punch bowl has been pissed in for so many years. No one's ever going to drink it again unless, unless there's a form of trust. And that's what gold is. And the marriage between cryptocurrency and gold, or distributed ledger technology and gold, to me is the only pathway into getting there.
Would that happen overnight though? Again, what are there any specific conditions that have to be met for a revaluation of gold? And I'm sorry for continuing on, but this again just
No,
an
there is
interesting
none.
topic.
Janet Yellen, all she has to do is tell Jerome Powell to do it. She doesn't even need congressional approval. Do it. Revalue the gold right now. So no, there is, I mean, my favorite saying, let's see my favorite saying. You see what that says? Can you see that?
It's a little blurred, but what says
Little
little
by
bit,
little, then all at once. Yeah,
little
I
bit, a
got
little bit
this
all at
setting
once.
that kind of blurs the background and brings me more forward so you
We
can't
want to
see
see
it
you,
yet.
so that's good.
Little by little, then all at once is my favorite saying. That's logarithmic decay. And you can use that in so many respects. What's happening socially, morally, economically, happening to the dollar, what's happening to our image. All of these things have been eroding little by little by little by little. And bang, what's that all at once moment look like? There is something called Operation Sandman that people should Google, where I can't vouch for it. I can't say it's real, but the theory is that there's 150 or whatever countries that have agreed, they call it the night of the switch, to dump dollars in treasuries and make that switch. There's your all at once moment. But all of these things have been leading up, the little by little by little. Look at the central banks buying more gold than at any time ever in history. Each year they keep setting records. And for the last few years, they've been buying it more than anyone, more than ever, really since 2017. And they've all been bringing their gold home. Over 40 central banks have brought their gold home from the New York Fed and the Bank of England. And it's not just because of counterparty risk. That's what the easy answer is. But they've always held it at the Bank of England to give immediate access to the LBMA, and held it at the New York Fed to give immediate access to the COMEX, the two hubs of gold trading. Well, if you read the white paper on the unit, it says the gold that will be used to mint these unit tokens will be held within the borders of the people that possess it, the countries that possess it, independently audited continuously, with massive penalties for any deviation from the protocol of the unit. They won't have to send their gold to any central location to trade it. They'll hold it themselves. They will put it in an escrow account and create these unit tokens, which will be used to settle energy. Everything else, they'll use their own central bank digital currencies, all of it over Enbridge, which does not have access to SWIFT, or is not compatible with SWIFT, nor is it compatible with dollars. And it's a way, I mean, it's the death knell for the dollar if it's implemented. So if you realize that it says all of these countries will hold their own gold, why do you think India just brought 100 metric tons of gold back from the Bank of England since 1991? They've been holding it there. And they bought 1.5 times the amount of gold they bought in the first 4 months of this year. They did that. And 1.5 times the amount they bought all of last year in the first 4 months of this year, sent it all back to India. So Saudi Arabia, Egypt, and half a dozen African countries all brought their gold back from the New York Fed in the last couple of months. And the list goes on and on and on, including, it's in 2017, it all started with the Bundesbank, Dutch National Bank, Hungary, Austria, Turkey, Poland, Czech National Bank, Dutch National Bank, and on and on and on, all brought their gold back. And since that day have been buying gold hand over fist. And I guarantee you none of them are being forthright how much they're buying, because it will be used. The BIS told them to do that in 2017. I know that because in 2019, they revalued gold as the only other tier one asset. And ironically, in 2017, all of these banks start bringing their gold back. In 2018, they buy More gold as a group of all those banks that brought it back as they did in the previous 60 years combined. And then in 2019, they doubled that amount. And then magically, the BIS reclassifies gold tier one. Well, guess who's behind Project Enbridge? Oh, yeah, it's also the BIS. And I guarantee you the BIS said, here's what's going to happen, you guys. We're going to a gold-backed system. Start buying gold and bringing it home. And all of the central banks are buying gold and bringing it home. And now the head of the BRICS New Development Bank says it is agreed in principle to a new gold-backed settlement currency, which is deliverable. And the head of IMF says central bank digital currencies aren't pegged to something, are fiat. Before that, they write a report saying gold is an international reserve, a barbarous relic no more, question mark. The world is, the elite are recognizing we must transition from a trustless system to one that inspires trust and confidence, or no one will ever drink that piss-laden punch bowl ever again. And that's the truth.
What about a central bank digital currency that is backed by gold? Is that something that would serve any of the powers that be? Is that something you see happening?
Yes, because like if you look at, and here again, revaluing the price of gold would do that, but look at the unit. They say 40% gold backing. That means 60% currencies. Now, I did an interview with Vince Lancy, and he thinks that China and Russia in particular will try their best to add a partial gold backing to the digital yuan and the digital ruble so that it will comprise the majority of the currency units held within the unit token. But if you have a system that is 40% gold backed, and again, it's a settlement currency. It's not a common currency. Every nation, according to the white paper in Enbridge, will retain their own central bank digital currency. And if you look at all of the countries that make up 98% of the world's GDP, every one of them has a CBDC in operation or development. And so they'll all trade their own CBDCs. Right now, you're seeing, like, for example, China trade with Brazil, the digital yuan for corn and soybeans, and they can take that gold Brazil can, send it back to the Shanghai Gold Exchange and convert it immediately into deliverable kilobar gold. Well, what is the unit token? It's kilobars. How do you like that? It's going to be kilobars held that are deliverable upon demand. And so they'll all have their central bank digital currencies, but if they want to trade in something different for energy, as an example, they'll use the settlement currency, the unit, which will be gold and currencies of the BRICS plus nations. And BIS is backing it. The BIS told all those countries in 2017, get your gold and bring it home and start buying it. And then magically, after 2.5 years of massive repatriation and buying, like we'd never seen before, oh yeah, it's tier one. And now we see the BIS is behind this, Project Enbridge, and all of these countries are massively buying gold like never before and bringing it home. You wait. It'll be tied to gold. And the West will have, at that moment, they'll have to do the same thing, or they will, suffer the fate of Gresham's law, where, the bad money is going to chase out the good money. The good money is going to leave, and there's going to be nothing left but the bad money. So that's what would happen. I just happen to think that there's a lot in store for gold. Now, I don't sell gold or silver as an investment. To me, it's wealth. And I think that you can see that by the actions of the world's most powerful banks. I think they see it as wealth. They're not buying it as an investment, nor did King Tut or pharaohs or queens or emperors or none of them. They didn't own gold as an investment. It's wealth. It has been since the beginning of time. And it inspires confidence. It has a finite supply. And unlike the ability of the West to create, trillions and trillions of dollars over the last few years, which has distorted all price discovery in traditional assets. So yeah, there's a lot to be said for where we're going in gold, brother. And I think it's just beginning. And the fact that the people in the West, there's more information that I've given, all of it backed by fact, except trying to put the pieces together. The fact has all been real. Everything I've said to you, it's verifiable, it's Googleable. The people in the West have no idea what's coming, and they can't get out of the way of it. So, listening to this podcast, you'd learn more in an hour about what's true than anything you would learn in 6 months of watching any of the news stations here in the United States.
What I have noticed is you talk about the people of the West. What I'm noticing with the consumer in the East, though, judging by the premiums, there is less demand for gold as to consume gold or gold as an investment than there is for gold as a saving. So what I mean by that is China. Right. Last week, I read an article talking about Chinese gold premiums, where the premiums went up to something like $18 last week on gold bullion because there was less demand for gold jewelry and there was more demand for gold bullion. I don't know if you saw that. I don't even know if that means something. You as a precious metals dealer would know more. So what is that? What's that dynamic
I
telling you?
mean, that's just that's the way they traditionally do things. Um, I think it's a poor way of doing it myself, because, I'd rather have a coin that is clearly marked by its weight rather than trying to figure out how much a bracelet is worth. But any way you look at it, the Chinese demand is off the charts. Their ETF numbers are off the charts. And they've been buying for a very, very long time. And again, I will simply say this, that I wouldn't take any information coming out of China about how much gold they're accumulating at face value. Um, to believe so, I think, is a mistake, simply because they understand that this is a game of misdirection. This is a game where they want to accumulate as much gold as they possibly can using the stupidity of the Western system, which sets the price against us, and to make it look like they're all in an all-out barrage of gold accumulation. Only it doesn't serve their purpose. So if you believe that everything you read is true, well, then maybe it's because that's how they accumulate things. If you believe that it would be in their best interest to be less than forthright about it, then maybe you should take that with a grain of salt and just simply say that the Chinese have been the biggest buyers of gold in the world for the last several years, and they continue to do so, along with being the biggest producers of it. And like I said, they're going around the world as the second largest producer of oil in the world. I mean, of silver in the world. They're going all around Latin America buying doré bars and silver concentrate from miners, paying twice what anyone else will, so they can bring it home off of exchange. So it doesn't reflect in the price. It doesn't reflect in import numbers. How much do they bring home? I don't know. It's unrefined. And then they refine it at home. This is the country that refined 100% of all rare earth metals last year. 100%, just 90%, 100. They have refining capabilities. So they're buying unrefined doré in rare earths, in precious metals, in all of these strategic assets, and going to great lengths to hide their accumulation. So yeah, I wouldn't believe it for a second, to be honest with you.
Hmm. What about you at Miles Franklin? What's the best selling product right now? What are people looking to buy the most? What's got the highest premium?
Gold and silver eagles typically are the two most sought after. The silver eagles have the highest premium for sure in the silver bullion world. And while business has been very good, it's nowhere near what it should be. I mean, it's been amazing when I look at it compared to where it was prior to 2019. But I can't imagine how the phones industry wide aren't blowing up with gold at all-time highs. But that's the byproduct, and the world in a mess, and the political situation in a mess, and the country in a mess, and all this crap. But that's the byproduct of a mentality of greed, where Nvidia and Bitcoin and Apple, where instant gratification is not fast enough and gold's not sexy enough. But what people don't understand is that gold has outpaced every traditional asset on the planet since 2000. It's averaged 9.9% return. Compounding over that period of time, it's outpaced the S&P 500, even with dividends reinvested over the last 25 years. It's the tortoise, not the hare. And yet at all-time highs, people are asleep at the switch. Mine and your common friend, Rick Rule, been my friend for a long time, will tell you that Joe and Jane six-pack all the way up to the Harvard Endowment Fund, the allocation of gold or gold equities to the American public and the American institutions is less than 0.5%. So, it's been the Chinese investor, it's been the central banks that have been yanking the price higher, with now 11 states in the United States recognizing gold and silver as legal tender for all debts, public and private, and upwards of 20 having it in front of their legislature or in infant stages of talking about it. uh, there might just be an awakening, and the American public will wake up, or some sort of a banking crisis, a bail-in, or something that I am all but positive will wake people up in a world where, an eighth of an inch separates calm from chaos of President Trump a few weeks ago, or like we said at the onset, a little, just a tiny 50 basis point interest rate hike in the yen can blow everything up. We're on razor's edge. And if people think it'll be smooth sailing between here and the election with the big BRICS meeting in between, I got, like I said, oceanfront real estate to sell you in Minneapolis. It ain't going to happen. There's going to be something that wakes people up. And when that happens, I think the American participation from the investor, which has been absent, could certainly add a little bit of booster fuel, if you will, to a market that continues to march higher, unabated and underappreciated and underrecognized by the West.
I thought you'd have oceanfront properties in Gainesville or something like that to sell. That'd be
Well,
curious.
that's just my joke. I live in Delray Beach. There's plenty of oceanfront property, but if I'm going to sell you oceanfront property in Minnesota, which is landlocked, um, you know, you're probably not going to want to buy that property. So I say that in jest. If you believe it, I got oceanfront property in Minnesota, ain't going to happen. I suppose that is harder to understand from someone who lives in Europe. Probably
No,
should
it
have
did
found a
get.
better.
I was just joking about Gainesville. Gainesville is also in Florida. It's a city. I don't even know how I know about this, but it's a city in Florida that's also like in the middle of Florida, so it's got no ocean front.
Okay, like Orlando. Sure, I get
Yeah,
it.
something along
Well,
those
in
lines.
any case, I got a bridge to nowhere to send you. Let's put it to you that way. So, I would just simply say that it's time to act like a contrarian. It's time to think like a contrarian.
Hmm.
I think if not, you're destined to be a victim to some degree, and I mean that completely and totally.
Well, but what do you mean? Why do you think you mentioned that you've spoken to a couple of gold or silver mining executives? We're not seeing any of the bullishness in gold translate to the equities. And I know you typically focus on the physical stuff and you have over the last decades. But when does that change? I mean, the equities are a leveraged play on gold and silver.
It happens
Why?
when the public wakes up. The public's invested. You have all the money in seven stocks.
Hmm,
People are reactionary. The media isn't alerting them to what's happening. They don't get it. They're following money managers who wouldn't know gold or a gold stock, most of them, if it fell on their foot. It's people are motivated by greed and fear. Fear being the strongest motivator. Greed has led the way for a long time, and they'll have their moment. And if you take every single mining share on the planet Earth, it probably has less of a capitalization than Coca-Cola. They'll have their day for sure, but yeah, they've been beat up. And when you talk about value, they're tremendous value.
hmm.
Um, in a world that is kind of lost its bearings, I suspect when they're slapped back into reality, it will be hard not to notice what the gold equities offer in terms of value.
Hmm. Andy Shectman, I think I'm out of questions, sir. What else am I forgetting to ask you? Though? What should I be asking? What's a
Oh,
topic that you
that's
think we
it,
should be
man.
talking?
You've asked a lot of great questions. In fact, I'm very impressed with the questions that you've asked. Um, you know, I think this will be something that you and I should pick back up on again in the next month or two, and see the things that have unfolded and developed. And I appreciate the opportunity to be here. I truly do. And as the Chinese curse goes, may you live in interesting times. These will be very interesting the next few months. So count me interested as someone who'd like to come and commentate, ride shotgun with you, leading up to the election and see what's going on. And I think everyone out there should get their house in order. Start paying yourself first. Do what you can to buy gold and silver to prepare for any type of disruption in credit in the credit markets. So you should have food, you should have water, you should have small bills, currency units to use, home protection wherever you are, to whatever degree that means. You should have gold and silver. You should do what you can to prepare, because I think what we are going headlong into, has the potential to be very unpleasant. Let's hope I'm wrong. But just like Adam Lipinski said of the Dutch central bank, I'll read this one last thing to you. You look at Poland, and they're the second biggest buyer in 2023, and they're right at the top here in 2024. I'll leave you with this: the head of their central bank, Adam Glapinski, I'd say he tipped his hand. He said, when he's talking about announcing a plan to expand their gold reserves, he says, holding gold is a matter of financial security and stability. Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. That's interesting. Of course, we do not assume this will happen. Well, thank you, Adam. But as the saying goes, forewarned is always insured, and the central bank is required to be prepared for even the most unfavorable circumstances. This is why we see a special role for gold in our foreign exchange management. And the Dutch National Bank, the head of the Dutch National Bank, the guy that keeps talking about the revaluation account and revaluing gold, he says, this has been a political decision, our accumulation of gold. And if there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. So when you talk about these central bankers dropping crumbs, one says the whole financial system is going to blow up like an EMP, or a system where all the records are kept electronically. Sorry, we lost them all. We got to reset and start over. The other guy says that when there is a financial crisis, gold will go to the moon and it will be used to underpin a new gold standard. Gold is the only other tier one asset. They're all buying it at a level the world has never seen and bringing it home. Chew on that for a little bit and ask yourself, these are the most not only well-funded people in the world, but they're also the most well-informed people. And are they dropping crumbs to clear their conscience, to say, we told you so? Or is it something else? I would simply say, where there's smoke, there's fire. And when the biggest money in the world is doing, don't listen to what they're all saying. Maybe listen to what these guys are saying and think about it a little bit. And gold is wealth, my man. It's been wealth for 5,000 years. And long after the bills that you call money in your wallet and I call money in my wallet are hanging from a frame in a museum, gold and silver will still be wealth. So that's what I have to say. And I'd love to do this again. So have me back. Let's take a look and see how my predictions go and what the world looks like over the next few months. And until then, my friend, I look forward to picking up where we left off.
I agree. I should have you back on quickly and more often. I enjoy these conversations, Andy, and thank you for the kind words as well. I know you have to go now. I'll let you just drop off, as I have something else here to do on this episode of Real Money Talks, and that would be the favorite part of my week. Really, it's the CEO barbecue, of course. But more specifically, it's the disclaimer of the CEO barbecue. As always, there is a warning on your screen right now that you are obligated to read, but also you should just read it if you care about your money, because this is not just some disclaimer. It is an actual warning that will help you not lose money, especially if you're not very experienced like myself, or even if you are, you should still read it, and you should understand how these things work. It's a big part of it. I repeat it in every video. Okay, I'll keep repeating it. Some people don't like it, but I think it's a good idea to let people know that I'm here to make money. I make money from the existence of this channel. The way this channel operates is that I get compensated for the time and effort that I and my team put into creating these videos. So the editing, the preparation, the questioning, and everything around it. And I get compensated by the companies that get interviewed on here. So they pay for the production of these interviews. And I would like you to be aware of the fact that Vizsla Copper here has paid for the production of this interview. Not all companies pay when they join us on this, but even the companies that are not paying are likely seeing their participation in this channel, coming on this channel. They see it as a chance to do some marketing. The paying ones, the non-paying ones, everyone sees everything out there as a chance to do marketing, really. So start by understanding that. That's one of the main things that you have to understand in finance is your counterparty. What's the incentive of your counterparty? So most company communication out there. So when you're reading a company presentation, your counterparty is that company. What's the incentive for the company to show you that presentation, to create that presentation? Well, it's marketing. Every company communication out there, especially online, is about marketing. Albeit this interview, their website, their Twitter account, that presentation, as I said, LinkedIn, when you hear an influencer or whatever they like calling themselves these days, when they talk about it, that's marketing. And although I don't make buy or sell recommendations, you're not going to see buy or sell recommendations on this website. My inbox is full of people asking me, hey, what should I buy? What are you buying? There's a clear conflict of interest. So I'm not doing that. No buy or sell recommendations. Many out there still do that though. So they're going to take money from the company and then they're going to turn around and tell their audience, oh, you should buy this stock because it's the next best thing since sliced bread. And you should be aware of that inherent bias. I'm not saying, I'm not commenting on their specific business model. I'm just saying that there is an inherent bias and not everyone will always tell you about that, or not everyone is always going to clearly disclose that. So it is safer for you anytime you're watching or consuming any type of company specific content, approach it knowing that. Approach it with a healthy dose of skepticism and treat it as marketing. And although I try to be different than other interview channels by looking into a little bit more than just the front page of the company's website and also asking the companies a little different questions than, hey, tell me how great your deposit is. I also don't give the questions, don't give the companies the questions up front. There are no questions off the table with me. I get to ask whatever I want. And the companies also get no editing rights over these videos. Like, so they're not going to be able to reach out and say, hey, I didn't like that question, take it out. That's not happening. All the questions are going to be in there. Even that being the case, you should still look at these things as advertisements and not as research. And least of all as recommendations. Unfortunately, I'm not a magician. I try to be a musician, as you can see, not very good at it, but I don't possess any superior knowledge about what is going to go up. I don't know what's going to go down. And I don't even know if things are going to go in circles. So there's going to be no guarantees made here, besides that there will be forward-looking statements in these conversations. And those are conversations that are general and impersonal in nature, containing hopes for the future and things that may or may not happen, depending on many different factors, including macroeconomics, geology, the financings, marketing, and a lot of things that are even outside of the company's control. So be aware of that inherent risk to investing and the increased risk of investing in a venture capital business, which these exploration companies typically are. And please talk to a professional investment advisor to see if any of these things are fitting for you before taking any decisions and regretting them later. As well as just do more research before talking to a professional investment advisor. Go to surplus.ca. It's a government official website. It's free for all, where you'll find the company's official filings. There's a couple of main documents that you want to go and read. It's the management discussion and analysis. It's also called the MD&A. It's the financial statements of the company that you want to read. They're always on there, the most recent one, preferably. It's the management discussion, the management information, management discussion and analysis as well, but the management information circular, that's going to show you how much money everybody within the company is making. Are they paying themselves too much? How is all that structured and whatnot? And then there's typically technical documents. They are difficult to understand, the NI 43 101s most of the time, at least to me. But I still try and read them. You can just read them as a book, and you're going to make sense at least of some of these things. And over time, you're going to start learning. And they are, again, they're dry, they're difficult, but over time, it gets better. So when you read these 4 documents, MD&A, financial statement, management information circular, NI 43 101 technical report, over time, you're going to get more experience and more knowledge. And you're not going to need anyone else's research. So again, the disclaimers on your screen right now. Please, if you don't enjoy losing money, read them. Be careful out there. Understand what I'm saying here. With all that, though, seems like a good time to shut up, but not quite, because I'll be kicking off the CEO interview, the CEO barbecue part of this Real Money Talks episode by traveling up to BC to look for gold and copper. And of course, I'm going to be helped by the man himself, Craig Perry, the CEO and chairman of Vizsla Copper, companies listed as VCU and the TSX Ventures Exchange in Canada, where an average of about 185,000 shares trade each day, with a 52-week high of 29 cents and a 52-week low of 7 cents. With a market cap of about $16 million and 230 million shares outstanding, today this is a 7-cent stock. In total, there are about 86 million warrants and 17 million options, leaving the number of fully diluted shares at about 330 million. This is largely a retail story, so we have 78% of the company being in the hands of retail shareholders, but management and advisors also own a decent chunk of it, especially after the recent financing that's currently at 18%. Goldfields and Eastfield Resources are also on the share registry, and they both hold 2% each. The last financial statement that I could find was dated January 31st, and it shows me close to $1 million in current assets, about half of which, so close to $500,000 at the time, was in cash and cash equivalents. It is worth noting, though, that this statement dates back almost 2 quarters, so more than 6 months, and Vizsla, as I alluded, has closed financings since. First of all, it closed a $2.5 million financing in March, as well as an upsized $5.5 million private placement not too long ago now. So they are now most likely sitting on something between $5 and $6 million, but they are also currently actively drilling. This being a non-revenue generating company means that they'll be using that cash to complete the drill program, as well as keep the lights on. So do keep that in mind. No long-term debt was to be observed at the end of January, and there was only about $600,000 worth of current liabilities. That's in total, not counting flow-through premiums, of course. And so mostly in the form of a loan that Vizsla Copper had gotten from its now sister, back in the day, mother company, I suppose, but sister company, Vizsla Silver. But I think that's being resolved now, as well as there is a $270,000 account payable on there as well. The same financial statement also shows me that Vizsla spent $3 million on operating expenses over the 9 months that ended in January, at the end of January of this year. And when I excluded share-based compensation, that's an average of about $260,000 a month. Again, on average, that is roughly 60% of that budget went into a couple of things, really, but it's a combination of consulting fees, director fees, salaries, professional fees, just making sure the team's paid. 18% was general and administrative, and another 18% is marketing. As to exploration and evaluation, that same period costed Vizsla about $6.5 million in exploration, or about $715,000 per month, again, on average, with drilling across across different projects. So not one project, they have multiple projects, as I'll tell you here about in a second, but drilling represented a significant chunk of that expense. And that was boot jam, but I'll talk about that more in a second. So yeah, between administration and exploration, the total monthly spend for the last quarter came in just shy of $1 million, so close to $1 million on average, again, with close to 75% of all the money spent going into exploration and evaluation. And so about 25% went into what I call administration as a whole, so the salaries and whatnot. Again, though, I would like to remind everyone that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of January of this year, and it discusses the first 9 months, or the last reported 9 months, better said. And they're not necessarily fully representative of how this company operates or will be operating in the future. So for you to make sure you're getting the full picture, please head over to setterplus.ca, as well as the company's own website, both of which are going to be linked somewhere down below. That full picture for Vizsla Copper started with, as I alluded to earlier, Vizsla Silver, actually. So this is a spinco of Vizsla Silver back in the second half of 2022, so almost 3 years ago now is when it got spun off. And Vizsla Copper now has its focus set on, not its focus, but they're working on 4 projects, I suppose. Wood jam really is the main focus here. That's also where a 9-hole, 3,600 meter drill program started in late June this year and is currently ongoing, as I mentioned. Wood jam is in East Central BC and has, as most projects in BC, already been looked at historically and holds an inferred resource showing 1.7 billion pounds of copper and an almost 1 million ounces of gold contained across 3 separate deposits. This is a large, so a 90,000 hectare property that, despite the historic resource and despite over $30 million and 120,000 meters of drilling having gone into it, the project is still largely underexplored, and only about 15% of the land package has been drill tested so far. So while the current program will be zooming in on some of those deposits making up the historic resource, Vizsla also wants to extend some of the zones to the southwest from those targets, as the project now contains 6 zones with no mineralized zones on them, while, again, only 3 of them make up that historic resource. And to give you an idea of what kind of grades these hold, it might be worth looking at some of the drilling Vizsla did in 2023, which came on the back of a ZTEM geophysical survey, by the way. And drill holes within those 3 zones that make up the resource showed up to 0.9% of copper equivalent over 66 meters at southeast. There was 0.26% copper equivalent over 110 meters at Megaton, There was 0.64% copper EQ over 37 meters at Dearborn, and 0.7% copper equivalent over 20 meters at Tacom. Adjacent to Wood Jam to the north is a smaller project. It's called Red Gold, where actually part of the 3,600-meter ongoing program is also expected to go into. As this project is, again, as I mentioned, a way smaller than Wood Jam, it already has 5 mineralized zones identified on it, with previous drilling at one of those zones coming back with 0.21% copper and 0.24 grams gold over 152 meters. Then there's the Poplar project, which came into the Vizsla portfolio after their acquisition of Universal Copper, and it's located in West Central BC. It's actually a little bit more to the north of the other two projects I was telling you about, so to the northwest, I suppose, from there. And it also contains a large-scale copper-gold porphyry deposit with an MRE on it dating from its previous owner and showing over 150 million tons of 0.3% copper with some moly and some gold and even some silver credits to it in the indicated category, as well as almost 140 million tons of copper grading 0.3% with same credits of gold, silver, moly in the inferred category. Vizsla, again, with this one, too, believes that there is more potential in the project and that it is underexplored, where, again, although about $15 million have been invested into it, mostly in the 70s, and 45,000 meters were drilled on it, that only really covered less than 2% of the total land package. So that is something we'll talk about later on in the conversation. But now seems like a good time for me to shut up, especially considering that this project, the Poplar project, is what you said got you interested in taking on a more active role in the company, Craig. And so you, because being CEO right now after the acquisition of Universal, so I'd be happy to better understand specifically what you saw in this project, and we'll talk about that later on for sure. But before we get to any of that, this is your first time on the CEO barbecue, so obligatory first question that you might find annoying, but why should I trust you with my money?
Well, the simple answer to that is you shouldn't just yet. But, it's an interesting business exploration. I sort of often think about, are we investors or speculators? What do we actually do? I've sort of transitioned a little bit away from, of course, I'm a geologist by trade, spent 8 years with Rio Tinto exploration in various roles around the world before going out on my own and joining Owen Hegarty to start the Tigers Realm group of companies, then founding NextGen Energy. I became chairman of Skeena and helped the acquisition of SK Creek before starting in the Inventor Group with Mike Connett. So I've got a long track record of doing, exploration and development work, not so much mining and operations, but a little bit of that, of course. And more and more, I'm becoming more of an investor in myself, I suppose. And what I do know is that, that is the right question to ask. I think at the end of the day, for investors, you have to back the people, even if they don't yet have the good projects, because they will end up with the good projects eventually. And so it's a people business as much as anything else. And I think, why would you trust me? Well, look, you can't, we've got a great track record, my team and I, and the teams I've built over the years. And I think, we steward our investors' money well. We invest heavily in everything we do ourselves. But of course, there's always that strong element of risk, particularly given we like to focus on exploration. So there's always a chance that you won't make a discovery. And, we've had that happen with companies in the past. I suppose the way we manage that personally nowadays is to buy projects where it's very clear that we're a chance of making a discovery, or a discovery's already been made and it hasn't been recognised, or the existing owners, the current owners, can't fund the project, and then advancing a project where you're a very strong likelihood of having an economic mining proposition emerge out of those projects. So we apply that. I think I missed you down at Rick Rule's conference, but I was on stage a bit there with Rick at his conference, and certainly all of his attendees have heard me say it a million times. But we typically look at projects through a lens that's characterized by three key concepts, and that is size of the prize, cost of the test, and chance of success. And if you use those criteria to filter projects, you can usually increase your odds of doing well out of an investment in this sector or a speculative investment in this sector. And so size of the prize, you refers to the idea that you want to be looking for projects of a scale that justify your investment. So, smaller projects take up just as much time as larger projects to run and advance. So you may as well be focused on bigger projects. And in the copper space, as an example, porphyry copper deposits is really where it's at. There are a few other copper deposit styles that justify that sort of investment. Of course, Robert Friedland's stuff in the sediment hosted type deposits can be very, very big. But porphyry copper is certainly a good place to focus on if you want a large project, a large deposit that can become a significant mine. That can give investors a serious shareholder return. So that's size of the prize. Cost of the test, it's always best to explore in places where it doesn't cost you too much to work. Now that's, in terms of access, not using helicopters, for example. Helicopters are a good way to use up a lot of your investor funds early on. Here, this is a great example of a project. This is one of the cheapest projects I've ever drilled at our Woodjam project. We're 20 kilometres away from the Mount Polly mine, mobilising drill rigs and accessing that project throughout the year is very, very cheap. So, you don't want to blow your brains out by spending too much money testing the targets that you come up with. So that's the cost of the test criteria. And then chance of success talks about really the prospectivity of an area, the mineral endowment of an area. To give you a good example, we do this a little bit at Inventor Capital, and Vizsla Copper is a great example of this, where the discovery's been made, but the existing owners couldn't really draw attention to it and couldn't unlock the value of that discovery. So we knew there was a resource base there. We're simply going in and further testing that terrain, testing that area, testing that project area, or expanding on existing resources. So very high likelihood that we're going to drill out more ounces, more tons, more pounds of whatever it might be that you're looking for. Another good example, I've had some success in the uranium space. I was a founder of Next Gen Energy and on the board there until a couple of years ago. I then started ISO Energy with Steve Blower and the team, and we made the Hurricane discovery. So that, two serious hitouts that I've had in the Athabasca Basin have led to pretty major discoveries. And that's partly because of that criteria. If you're going to explore for high-grade uranium, you may as well do it in the terrain that's known for high-grade uranium. And certainly the Athabasca Basin's that. Certainly at Vizsla Silver, we applied the same criteria. And on that chance of success, there's obviously no better place on the planet to go and explore for silver deposits, world-class silver deposits, than the Sierra Madre, where there's, I think, of the world's 10 or 11 billion ounce plus districts, about 7 of them are in that terrain. So you really increase your odds of success by doing that. So if anything, what I would say is the reason you can trust us is we are good stewards of capital. I've got a fantastic team of people behind me that are very good at doing what they do in terms of exploration, engineering, financial, corporate management. So that's crucial as well. And then lastly, the fact that we apply those criteria very rigorously to increase our chance of delivering an economic return to our investors.
But it's new to me that you shouldn't be doing helicopter stuff. I thought you're supposed to set up a helicopter company first and then have your own company, contract them. This is where I typically follow up with the question, Perry. Are you trusting yourself and with your own money, basically? And you already mentioned that, though, on the company level. You also already know, as I mentioned in my overview, there's an 18% insider ownership. How much of that is you as a new now the CEO, and what's your average cost of capital?
Yeah, that's a great question. Look, I've put in about $1.5 million into this so far myself. So my partners and I typically write the biggest checks. So we put our money where our mouth is. I think my average cost of entry into the story so far is probably around 20 cents. So we're well underwater at the moment, but that's fine. We keep buying stock. We keep participating heavily in these placements ourselves and propping up the company when others don't want to do it. And there's a good reason for that. We'll get to the story of the company in a little bit, but it just reminds me. I had a chat with Adam Lundeen just before they announced that massive discovery at Filo, and around that time, and Adam made the point that he said, I think we're on the verge of something massive, and we own most of the stock as a family ourselves because for 20 years no one wanted to back us, no one believed us, and no one believed the story. So they accumulated, kept investing, kept backing themselves, and made that huge discovery. And I suspect that Adam, Jack, and Harry are now probably up $1 billion out of that Philo discovery. So, and it's the same for us here. We keep backing the story when no one else wants to do it. Our share price is languishing a little bit today. Off the back of that, but we're not worried. If anyone wants to sell, we'll sit there in the market and buy their stock from them, type of thing, because we're very clear on what we've got here, where we're going, and how we're going to derive value for shareholders.
How much of your time, and I know you're a busy man, so what percentage of your time would you say goes into Vizsla Copper specifically versus some of the other companies you're involved with on different levels?
Well, I still typically work sort of 12 or 14 hours a day. And so certainly more than 100% of a standard day job goes into this company. I'm on the board. I've really stepped back in the past 12 months from some of my other duties, stepped off for a number of boards. I'm still on the board, chairman of and major investor in Vizsla Silver. I'm on the board as lead director of Skeena, which is fabulous story, and I love to be involved there. And it's important to what we're doing at Vizsla Copper as well, because I'm getting a really good line of sight on what's going on in British Columbia, who wants to finance in British Columbia, and First Nations and government relations issues and permitting issues is important there. So that's very useful. I'm on the board of a couple of legacy companies from Inventor, so Outback Goldfields. I'm still helping out there, and Gold Bull Resources. But that will change over the next 12 months. So really, I give 100% of my time to this. The board duties take up a little bit of time, but it's not too much. And the reason I'm doing that, I didn't really see myself stepping back in as CEO at this stage, but I'm very passionate about trying to build. I've had a bit of success in other sectors, particularly uranium, precious metals now with Vizsla Silver and Skeena, of course. But my favorite metal, and I think the most important metal on the planet, is copper. I've built a number of copper companies with mixed results over the last 15 years. It's an itch I haven't scratched. I still think that there's an opportunity to build the next mid-tier and serious copper producer in Canada, particularly with a focus on British Columbia. So that's my focus at the moment. That's why I've stepped back into the CEO saddle. We've got a huge number of things we're trying to do here with the company. We're drilling at the moment. We've done a lot of M&A. There's more to come on that front. We're working hard on a couple of things. So I want to steward that to a point where it becomes self-sustaining and a serious chance of being a mid-tier copper producer in the shortest of time frames. So I've set myself that challenge, Antonio. We'll see how I go on that front. I'm excited to be heavily involved in this one.
14 hours a day of junior mining can do weird stuff to a man. I know that's kind of my life too. But wood jam, let's talk about that. That's where you're drilling, as you just mentioned. Let's start maybe high level, dive a little bit deeper on later on. But what's the main unanswered question there? What's the goal you're drilling with in mind?
Yeah, good question. So look, wood jam's an interesting one. We've had our eye on this. We started Vizsla as it was called Vizsla Resources back in about 2018. And we staked and acquired a couple of porphyry target projects. I don't think they actually had porphyries on them in central British Columbia, but we always had an eye on acquiring this project because we think that there's something special about the Earth's crust here. And I'll come back to that, but we failed on securing the project 6 years ago when we started the company. Mike and I got on a plane when we and went down to Mexico, Sinaloa, Mexico. And our first half day in the field at the Panuco Kapala project that we've got in Vizsla Silver screamed to us, we must do this deal, even though it was a bit of a challenging deal at the time. We had to raise 45 million to do it. But we got that done. And now Vizsla Silver, I think, is, widely recognised as the leading independent silver company on the planet today. And we put out our PEA on Vizsla Silver there a few weeks ago, about a month ago, actually. A spectacular project, the likes of which really hasn't been seen for 30 years. The first thing about Vizsla Silver is it's, I think it will be a 1 billion ounce silver district over time. We're already, in 3 short years, over 300 million ounces of silver there at very, very high grades. The PEAs, you don't see too many projects. Certainly these days you don't, but, if you go back 30 years ago, they were still very prized, where you've got a project that has a capital cost estimate of about 220 million and an MPV well north of $1 billion. So you're talking about a 5 times MPV to capex ratio. So it's an extraordinary project and will become, I think, the 4th or 5th biggest silver mine in the world if we build it in its current form. I think it'll keep growing from there. So that project rightly demanded our attention. And then, that left us with this ground in British Columbia and this concept of building a copper business that was a little bit orphaned. And that's when I stepped back in to reinvigorate our interest in this Woodjam project. We acquired that through the acquisition of Woodjam Consolidated, the company, for the princely sum of $11 million. And back earlier this year, we announced the acquisition of Universal Copper for their Poplar project. So what we're trying to do is accumulate for very little cash and as little stock as possible, serious scalable porphyry copper projects in a great mining jurisdiction in British Columbia. The thing that attracted us to Woodjam, firstly, it's a very large property in a great location. You're only 40 kilometres to the east of the regional centre of Williams Lake. Great year-round access. It's been heavily logged. It's the perfect place to build a mine. Indeed, we're only the project's 10 kilometres, starts 10 kilometres south of the big Mount Poly mine, Imperial Metals Mount Poly mine. You've got Gibraltar just up the road. So it's a mining jurisdiction. There's a lot of metal in the ground that's already been drilled out. There's about 2 billion tonnes, 2 billion pounds of copper that's been drilled out to date, and nearly 1 million ounces of gold. We paid $11 million for that, so the price was right. But there's something really interesting about the Earth's crust that's tantalising to a porphyry geologist like me. I cut my teeth at Rio Tinto. As I say, I spent 2 years living in Antofagasta and working in the Chilean Cordillera, looking at some of the world's great porphyry deposits and exploring that terrain for porphyries before Rio moved me to China to head up our porphyry copper projects in that Tethyan belt that included Oyu Tolgoi. I think I was the first person from Rio Tinto to visit Oyu Tolgoi, actually, and Rio, of course, now owns that project from some of that work. So, I've spent a long time doing porphyry copper exploration, all the way back from 2004, so over 20 years. And what I do know is that these, porphyries typically occur in clusters. The strike rate, Bill Morton, who headed up Consolidated Woodjam, in the time they had the project, they tested 7 targets at the central part of the property. That resulted in the discovery of 5 discrete porphyry centres. This must have been one hell of a huge stratovolcano back when these things were being formed. And the first bit of work we did when we got out there was to do a detailed mag survey over the central part of the property. And in doing so, we came up with another 103 discrete mag targets, many of which are the classic sort of donut type targets that hint at the existence of a porphyry centre below them. You get magnetite destruction at the center of a porphyry system. So you end up with these donut type anomalies. And we've got a lot of those there. So we think that this is a cluster of many, many porphyries. And what we noticed when we got out there was that the rocks were very, very potassic rich. And there was a mixture of alkaline and calc-alkaline porphyries. But the rocks looked, you've got these very potassic cyanitic porphyry rocks. They looked very, very similar to Rio Tinto's North Parkes project, which I've visited a number of times in central New South Wales. And North Parkes is a good example where you've got a cluster of porphyries. I think Rio Tinto and its predecessors tested over 40 porphyry targets there, 3 of which turned into, serious deposits. I think the global resource when I left Rio in 2008 was about 300 million tonnes at 1.5% copper across those 3 porphyries. But beyond that, there's a very big halo of 0.5% copper, and then now I understand the current owners are looking at doing a mega pit there and mining all of that material out. But we know that there's, and so we saw a direct analogue between North Parkes and what we see here. And certainly we brought on board a geologist, fabulous geologist, one of British Columbia's leading porphyry experts, a fellow by the name of Dr. Chris Leslie. And Chris did his PhD on those Macquarie Arc porphyries in New South Wales and Victoria. And he saw the same analog as me here on this project. So there was so much there that we really wanted to put our foot on the project, drill out the existing resource base, but also get in and test some of these other targets. And who knows what you might find. But certainly there's enough smoke there. So as I say, there's nearly 2 billion pounds of copper and 1 million ounces of gold in the existing deposits that have been discovered. Some of those, as we're seeing, we're drilling at the moment, Deerhorn. We're testing the southern flank or southern extent of the Deerhorn deposit. And we're getting some really interesting results. There's some juicy looking rocks in the core coming out of there. So we think that the existing discoveries are wide open. And in that area at Deerhorn, there's some very, very high grades. The best drill hole at Deerhorn was 110 metres at 2.6 grams per tonne gold and 0.44% copper. So we know there's high grade. There's North Parkes type grades. The rocks look like North Parkes. And we think we're a very good chance of making a serious high-grade discovery. And high-grade today, you would have to say, is probably 1% copper, given that the global average copper grade mined around the world is about 0.5, 0.6% today. So we think there's strong potential for that. There's already a large resource base there that will have economic value when the copper price gets $20 or $30 a pound, like I think it will over the next 5 years. So there's value to be unlocked by that existing resource base, huge potential expansion of these existing high-grade zones, and then a great chance of discovery of new porphyry centres that have potential high grades to them. So it just ticked all the boxes that we wanted to see. And then, size of the prize is there, big porphyry systems, cost of the test, very cheap. In fact, when we mobilised, I think it's the cheapest. Of course, I spent a lot of time out in the Athabasca Basin drilling. I've got a lot of experience drilling in Canada and again with Skeena. This is some of the cheapest drilling that I've seen in the past 20 years of working in the business because of the location. So cost of the test is cheap, and then chance of success. Well, there's already great success there, and the conversion rate of target to discovery is something like I've never seen before. So there's a huge amount to like about this project. So that's why we're there, Antonio.
This is you bring up a good point when you talk about the high grade, and you're reminding me of another CEO barbecue special question here for first time guests. But BC has been looked at extensively over the years. Woodjam, again, as I mentioned at the beginning, as you said, seen a lot of exploration dollars and drill meters go into it. Why do you think they missed on that high grade? What do you like? What else can you do? What can you do differently to potentially change the outcome relative to what they did?
Yeah, it's an interesting project. It's got a bit of mythical status here in British Columbia amongst geologists. I know there are a lot that were excited to see we got it. I think the initial discoveries were probably made 25 years ago. And you've had Goldfields actually had it as their second most important project globally for exploration up until 2013, when the world went to hell in a handbasket, or at least our mining world, and everyone cut exploration costs back and budgets back to next to zero. Goldfields did the same. They spent actually about $30 million drilling out the southeast deposit. They drilled out and they liked it for its gold potential, but you know that across the project there's 263 million tons at about 0.4% copper equivalent, and most of their focus was on the southeast deposit where they saw some very high gold grades. So they did a lot of work. They then converted that their project interest into interest in the company, and hence, you know, they're a legacy shareholder. They're you know, they're keenly watching what we're doing. The project then went back to the original owners in Consolidated Wood Jam, Bill Morton, Glenn and his team and their team. And then they really, of course, we went through this downturn that we've been through, that we're now sort of into the 11th year of, and they really just couldn't raise any money to drill the project out. So, you know, Bill would go out, raise $500,000 a year, drill a smattering of holes, 3-4 holes, and then go away. So that, you know, it's a project that time forgot about in a way. But in that time, he did drill some really bloody spectacular drill holes. And as I say, that Deerhorn hole is a good example. There was another one at Megabuck, 361 meters at 0.84 grams gold and 0.12 copper. And that really fell on deaf ears in the market. No one really saw it. Because no one was interested and no one was watching. So that's been the story. It's sort of largely sat dormant for the last 10 years until we came along, and we're finally giving it the attention it deserves in terms of being able to raise money and do good drilling. And you know, we're in the middle of a 5,000 meter drill campaign at the moment. That's been going for 4 weeks now. As I say, we're starting to see core come out of the ground from both Deerhorn, southeast, and for the first time for us, the Three Firs deposit, and seeing some really interesting looking rocks coming out of the ground. There's certainly going to be a bit of copper and quite a bit of gold in some of those drill holes that we're seeing. We're waiting on assays there. It's really for us about bringing attention back to the project in the area. And certainly, you know, British Columbia sort of gets a bad rap for low grade deposits, but if you look actually around, you sit back and look at things, you know, Red Chris, New Afton, some of these other projects, and of course here. And Steve tells me, Steve Blower, our VP of Exploration, was actually the mine geologist at Huckleberry. He says that there was probably 50 million tonnes at about 0.7, 0.8% that were initially mined there. So we know there are higher grade zones in these systems. It's just that no one's taken the time to really figure out, do good geology and understand the controls on these high grade zones. So that's, you know, that's what we're doing differently here is, you know, access to capital, money to test these theses, and better geological work to really pull out the higher grade zones.
When again do you think you're going to have results out? I mean, you started drilling at the end of June, so end of August. So it's unreasonable.
Don't think it. Yeah, I would say so. Don't think it too disingenuous of me that, you know, we'll be rushing assays and trying to get things ready just in time for a release pre-Beaver Creek. We put out we acquired Universal Copper for $3 million earlier in the year, and you know, that's another that will, I think, you know, give us 10 years, and that'll go down as in history as one of the great bargains of all time. But we paid $3 million for a project that's had in today's dollars probably over 50 million spent on it by Utah Copper and its subsequent iterations. That project gives us again nearly 2 billion pounds of copper and 750,000 ounces of gold at about 0.4% copper equivalent, and we acquired that for $3 million. So we put out a news release on that earlier this week. I was out in the field there 6 weeks ago, flabbergasted by what we saw. Huge alteration zones, great structure, copper staining on rocks, you know, classic porphyry style alteration. And indeed in the field we stumbled across an outcropping porphyritic rock. So that doesn't happen too much in a geologist's career. So we're excited about what we've got there, but these drill results will have, you know, should have something out for Beaver Creek, and then the following 6 weeks or so as we wrap up that drill campaign.
It's it's very amusing listening to you talk about copper and how passionate you get. I think I should have you and Robert Friedland on to debate who's more bullish on copper. Uh, I think that gets some attention. But
Yeah, I'm
yeah,
glad he wasn't on stage with us there at in Boca Raton at Rick's conference, because he's sort of, he tends to dominate a bit, but there'd be a bit of a pissing match as to who thinks the copper price is going to be higher. But certainly I think that we'll see $30 a pound copper over the next 5 or 10 years.
but yeah, that's a big statement. I'm bullish on copper over the long run too. I'm curious what happens over the short run with all these problems, but then that's why you have gold. Is grade a main driver for how you prioritize your targets? Like, are you trying to make this from sort of a BC grade story, which is kind of a 0.5% copper, into a high grade? Like, that's your main priority. That's how you pick targets.
Yeah, that's a really good question, because I guess there's a couple of ways to win here. We've got this large lower grade resource base, and when the copper market rises, that will be valued accordingly. But we do see this great potential for higher grade mineralization, giving us an early mining opportunity. At the moment, the resource base at Deerhorn is 33 million tons at about 0.7% copper equivalent. We can see that expanding, if the assays are what we think they might be from these southern holes, you can see that area growing. What I'd love to see is, a resource base, for argument's sake, of somewhere between 50 and 100 million tons at that 0.7 or 0.8% copper equivalent. Then we're close to surface, and it is close to surface. And then we've got a mining project that we can start work on. And indeed, we've been doing some internal scoping studies on that Deerhorn southeastern megabuck zone, and looking at southeast a little bit deep because it's got some glacial till cover over it, but Deerhorn and megabuck don't. So there's an opportunity there early on to mine from the outcropping and shallow mineralization at megabuck and Deerhorn while you do the pre-strip on southeast and move on to that. However, if we expand that zone of 0.7% copper mineralization at Deerhorn, I think we're a good, strong chance of growing that resource base so that it's a standalone project that we can develop ourselves with modest capex. When I say modest capex, sub sort of $400 million capex, and then leave the bigger type of project to the big boys. And on that front, I should say, British Columbia has been the subject of serious investment from the majors here in recent times. It's growing in popularity. We saw BHP put 14 million into Brixton Metals. Teck have invested 10 million into Kodiak, a couple of $1 million into American Eagle. Freeport McMoran put 110 million into AMARC. And their Joy property. We saw, a company that I'm a major shareholder of, Surge Copper, African Rainbow Minerals, came in for 2.8 million in a strategic position there. Boliden are back, Antofagasta, and really South 32, of course, have got a big position. Barrick are in the province, Newmont are in the province, and the really interesting one for us is our friends at Fortescue have recently staked a huge swathe of ground just to the west of our Woodjam property. The Woodjam property is a massive project area. It's 90,000 hectares. Fortescue have staked nearly 300,000 hectares all along the west of us. So, you're seeing serious interest return to the area. And those guys want those big lower grade porphyry systems, billions of tons of 0.4, 0.5 material, and any high grade that's hiding within that. So for us, focusing on the high grade zones, pulling those out, having a mining, an economic mining proposition from that, and letting someone else focus on the big, billion ton plus 0.4% copper potential materials is the concept there.
And you're focusing this drilling specifically, you're focusing on, again, Deerhorn, 31st, Southeast, and then potentially some of the other project to the north, Red Gold. What's the split, maybe percentage-wise, as to what you drill there? What gets the most attention now?
Well, given what we're seeing at Deerhorn, I think we'll come back and do more holes there because that's looking very exciting to us. Southeast, we see it as drilled out pretty effectively to date. There's a little bit more work to do there, so we'll do some holes there. Three Firs, unfortunately, we haven't been able to get in and test that ourselves due to permitting issues, but that's now sorted out. So we're drilling there as we speak. We have, as I mentioned up front there, we've got 103 other discrete mag targets to test. So we'd like to test those over time, but you go where the low-hanging fruit is, and that is around these existing high-grade zones. So we want to drill those out. And then red gold, look, interestingly enough, we have an exploration commitment there. We need to do $400,000 worth of work this year. That, partially drives our thinking of doing some holes up there. But we've got some really compelling targets. Of course, the red gold property is only 10 kilometres away from the Mount Polly mine pit. Mount Polly have been getting some good results in recent times, 100 metres at over % copper. So we know, just 10 kilometres away from us, you've got those sorts of grades. You've got everything you want to see outcropping there as well. You've got copper-stained rocks, altered rocks, tourmaline breccias. So we're, very... and that project's had limited drilling to date, so we're very keen to get in there and see what we might have. The split across the property has really been driven by, testing on a prioritised basis. So starting with Deerhorn. So we've started there, given that, we already know there's high grade there. And certainly the results of the rocks we're seeing coming out of the ground justifies going back in there, and then testing some of these other targets where we see merit on a prioritised basis. But as I say, I sort of keep coming back to that Deerhorn area where we're quite excited.
What's the budget going to be there for the 3,600 meters?
About $2.5 million. We were considering drilling down at Poplar, but I think, in the past 3 weeks, we've seen the market, it's still, we saw the copper price roar to life a couple of months ago and hit all-time highs. It's come back. It's trading, safely around $4 at the moment. But I think this market's still a little bit skittish. It's not quite as, robust and positive as you'd hope just yet. It will be in the not too distant future. So we're just reconsidering whether we do any drilling down at Poplar. Certainly we've got some resistivity and IP work to do over that new alteration zone that we've identified there. So we'll do that first before we decide to drill on that program. And, at the moment, I think we've got a little bit over 6 million in the bank. That'll probably be $4 million or so, a little bit less when we finish this drill program. I think it's, as I mentioned, we try to be, good stewards of investor capital, and it's careful to, I think it's prudent just at the moment to protect our capital a little bit for the next 6 months till we see where the market goes, because we don't want to be rushing back to the market in this type of, in a market like this just at the moment.
I do want to talk about financings there. Just one point before we go into it, mostly because it's interesting to me how you guys think about financings. But so yes, you say about 2.5 million is what that's going to cost you. You have a little over 6. You said, okay, so you're going to be left with 3.5 to 4 million bucks. How much of that is going to go into G&A? As I mentioned in January, your average was about $250 a month on G&A. Has that changed? Is it going to evolve over 2024?
Yeah, look, we've included salaries in there, but of course, there's a lot of geologists and geological work, and I do a bit myself. So it's technically a bit lower than that. We've done a little bit of promotion, but we haven't done too much. So that's sort of dropped off as well. We typically try and spend 70% of investors' money in the ground. I suppose we raised $2 million in hard financing 4 months ago. And then we recently raised $5.3 million, the bulk of which was flow through. I think we did $1 million of hard and the rest flow through. So, we're on the hook over the next 18 months to spend $4 million on exploration. So we'll do that. But we'll take our time here because, let's see what this drill program brings, and then use that to further rank and prioritize our targets and where we go next. Again, so judicious stewardship of our capital, and particularly where we spend those flow through dollars. I would estimate that if we don't do anything else, but of course, we're very active. There's not much point in having an exploration company unless you're doing exploration. The temptation has been to sit out and, just wait it out until someone values this resource base that we've got. But if you do that, it'll be death by 1,000 cuts anyway. You're going to see dwindling of your share price and finances regardless. So we believe you've got to get in, keep spending. Your shareholders are investing in the hope of further discoveries and expansion of those resource bases. So we'll keep exploring, but doing it judiciously just at the moment.
Well, you got to have money to spend it, and you haven't right now. And that's what I want to talk about here. Like, how do you guys think about raising capital as a whole? And I mean, Invenza has done what, billions of dollars worth of financing. So I suppose over the years, you know how to get capital. That's not an issue. But when it comes down to Vizsla Copper, again, it's one of the smaller market caps in the group right now. How do you approach raising capital this market? And are there any creative options than just straight equity here?
Yeah, good question. Look, so the first thing is that I and my partners, Mike Connett, Simon Smirlek, Mahesh Lianagi, we have the expectation that we're going to be writing the big checks ourselves. And we continue to do that. And fortunately, we've had success that we can afford to do that. So, and that very much helps you raise finance when people see that I'm writing a big check myself. We've got a major investor and partner in the business called Dave Schmidt. Dave's always there backing up and writing big checks as well. So whenever we approach a financing, we know that we've got a good chunk of it done ourselves, and we're not going to go broke because we can prop these companies up ourselves. But it's the usual story, a lot of hard work. I spend a lot of time doing roadshows, doing interviews, talking to investors. So, usual story. We do have the advantage that we've had some real successes, across the group, and me personally, and, NextGen, ISO Energy, Skeena, Vizsla Silver. We've made a lot of people a lot of money over the years. So we typically don't find it too hard to find capital and finance these companies. With the smaller thing, in a sort of a bit of an out of love story like this, it can be a bit more challenging. So it's hard work, but as I say, the key thing is that we write big checks, we put our money where our mouths are, and do that ourselves. And then in terms of, and we've got some bigger backers who write checks. Of course, Eric Sprott, I think, vies with me for the second or third biggest position in Vizsla Silver. We've got great backers like that we can always call on. Peter Brown, good friend of mine. Peter's always keen to write a check for what we're doing next. So we've got, good high net worth backers that support us as well. And then in terms of alternatives, I hint there at the majors being interested in bigger systems and bigger, multi-billion ton type opportunities. Here at Woodjam, and I mentioned that we've got a huge number of targets at Woodjam. We have the same down at Poplar. Now is the point in time where we certainly consider bringing in a major for part of one of the projects, if not all of the projects, to focus on that. We would focus on these higher grade opportunities, projects that we can bring into development and completion ourselves, whilst farming out part of the project to one of the bigger guys that can fund, larger drill campaigns and higher capex development projects. And certainly, as I mentioned there before, the majors have all flooded into BC in recent times. I've got a view that, I suppose 0.5% copper is the new 1% copper. If you go back to when I was at Rio Tinto, the global head grade of mines around the world was about 0.9% copper, and now it's about 0.5 to 0.6%. That'll keep coming down. And British Columbia, I'm looking at a part of BC here in Vancouver at the moment, and somewhere in those hills up there's many billions, if not sort of 40 billion tonnes of 0.4% copper material. And I think over the next 20 years, BC has the opportunity to become one of the world's great producers. It might not be the next Chile or Peru, Antonio, but certainly a major producer of copper to supply this green and desperately needed metal to a metal-hungry world. So we're sort of taking a view that this is the right place to invest, the right place to be, and the opportunity here is huge. And if you can buy projects like Poplar for $3 million, you can't go wrong. We'll do that all day long.
Hmm. But you are talking about asset level dilution as opposed to equity dilution, there being the potential, but really when it also has the potential to add something to the Vizsla Copper story as a whole, as it being a major. So that's telling me, or I'm assuming from that answer, that you're not looking to transact any of the other assets outside of Poplar and I mean your flagship assets, any of the other assets that are on the books. Would you be looking to sell those, get optionees on them? Like, well, how do you look at that?
Yeah, it's a great question. When we started ISO Energy, we took the view that, I was fortunately blessed by a great team, Steve Blower, who, he's discovered three major uranium deposits so far. Steve knows the Athabasca Basin like the back of his hand. And what we did in the sort of under the cover of a very bad uranium market, from about 2016 to 2020, we went from having, I bought four modest sized projects, some of them postage stamp sized properties out of NextGen. NextGen was our major shareholder, of course. And we then went about building up the third biggest independently held land position in the Athabasca Basin during that bad market. We're doing the same thing. And then before I left, we started optioning out and selling out some of those projects so that we could become self-sustaining and not have to come back to the market all the time. We'd have stock in a company we could sell that we'd farmed out to, or cash from those transactions. We're doing the same thing here. Poplar's a good example. It will be a mine one day, and someone will covet it when you get much higher copper prices. So those sorts of opportunities, we can then look at what we do with them, sell them off, joint venture them out, farm them out, or the like. So it's a bit of a straw hats and winter type strategy. Let's, put our foot on as many of these, people want to say lower grade. I would say that they're modest grade or mid grade projects now. Put our foot on as many tons of those as we can. And when they start to become coveted, start farming and selling those off and helping the company become self-sustaining before we go into production.
Where's the risk appetite for majors right now? Do you think sort of if you look at the Lassonde curve, it seems like they want to be buying as far out to the right as possible. Like we're seeing them getting in some of the larger companies, definitely not the majors, but some of the larger companies are getting involved in JVs and whatnot. But rarely do we ever see a sort of an outright buy of an early stage asset, like a pre-MRE asset or something like that. Yeah, what do you think that risk appetite is now?
That's a really, really interesting question. I had the privilege of being on stage and then had lunch with Sean Boyd from Agnico Eagle down in Boca Raton. And, Sean was telling us there, I think that Agnico is a great example. I think it's one of the best stewarded mining companies on the planet today. And
Sure.
Sean made the point that they are very much happy to wait until a thing is fully permitted and even potentially funded before they go in. They're happy to pay 1.1 times NAV for an asset. They don't want to take on any of that earlier stage risk. So they're right up the end of the Lassonde curve. They're, before you move into development, perhaps, or even post-development, they're happy to make those sorts of acquisitions because projects like that of quality are starting to diminish and disappear. And of course, yesterday we had big news that Goldfields, our friends at Goldfields, one of our shareholders here at Vizsla Silver, had bid for and indeed are acquiring a Cisco Mining at a 55% premium to their share price, VWAP on the day, about 60-something% share premium to the share price on the day. $2.2 billion acquisition, I think. And, a Cisco Mining for their Windfall project, their major project, don't have in place permits just yet. So it's pre-development, pre-permit that they're willing to make those acquisitions. And I think the majors, if they're to keep on their development, their production timelines, are going to have to go further to the left on the Lassonde curve to keep growing their production or maintaining their production. So I look out for more on this space. Skeena, we're very excited by that news, and the market was too. I think BMO put out a note saying that the obvious rotation trade is to sell out of to the arbitrage investors. Of course, you might know that, but the arbitrage investors probably now own 60% of a Cisco after only 24 hours of trade. It's phenomenal how quickly those guys come in and free up capital for investors when a takeover bid happens. But the obvious trade for people selling out of a Cisco mining is to move into Skeena. And Skeena was up 25% yesterday. I think we're up another 5% today, so about 30% off the back of the takeout of a Cisco mining. A little bit shocked that Vizsla Silver hasn't come under the same pop yet, but that will come. But certainly the indications are that these majors recognise that they've got to go, wade further down the Lassonde curve if they're to beat their competition and continue to grow their production profiles. So it's a very exciting time, I think, for the sector. We're about to see some serious consolidation. To my mind, Antonio, it looks like 2005. My wife and I moved back from Chile in 2005 to Melbourne, Australia. She got a job with Western Mining. Western Mining was taken out by BHP about 18 months later. It was the first really big acquisition at the start, the pointy end of that last resource boom. Of course, we saw BHP bid for Anglo a year ago. They failed in that, but you're starting to see these very big acquisitions happen and then moving down into smaller stories and further down the Lassonde curve. So I think we're right at the nascent stages of what will be the biggest boom in mining we've ever seen.
Those are big words again. To rival with many people actually that I interview over time. It's Rick Roll himself, Robert Friedland. So very, very good points there. That's something that we could make a whole podcast on, actually, Craig, you and I. What does that mean? I would love it too, but what does that mean for Vizsla Copper here specifically? Does it mean that you go out there and start pushing toward doing an MRE as quickly as possible so that you're at least sort of at that break even point for a major to look at you? Or like, what does that mean for your corporate strategy, if you will?
Yeah, good question. Look, I can tell you that, those companies are getting interested in the area in BC, and you've seen those investments that I've listed there. I think more and more we're going to see more serious investment. We were quite astonished to wake up on Monday morning about a month ago and find out that Fortescue was staked 300,000 hectares just to the west of us. So it's sort of coming. For us, again, you've got to very much be careful and weigh how much you spend on the project, meter out the capital so that you're not constantly coming back to the market without good results and good news. So there's a bit of a sort of cat and mouse game in a way. You're following a line to preserve capital, not dilute your shareholders too much, but make sure you have good news flow. But certainly we'll look now where we've got, a resource base that we see that we like but don't think we'll develop. I suppose the acquisition of Poplar gives us another string to the bow. We're certainly doing some internal scoping study work on that project as we speak. I think, safe to say that Wood Jam and those high grade zones are what's most attractive to us now. But it gives us opportunity to farm that out for, some cash injection into the company as well. But at the moment, you don't want to do too much because I think we're about to go through that inflection point. Might not be now, but certainly over the next year or so, year or two, where the copper price really goes hyperbolic and so you want to bide your time until you see a much better market. It's not here just yet, but you get a sense that it's coming with all of that new investment, all of this M&A that's kicking off now.
I know you almost have to go here, though. As I mentioned, you're a busy man, so working toward closing it off here. How's permitting for you? What permits do you have in hand? How far can you go on the current permits?
Yeah, we're in pretty good shape on that front. The previous explorers on Wood Jam did a good job of having in place all of our exploration permits that we need. We didn't have, oddly enough, One for the Three Firs project. We got that in place here in the past couple of months, and so that allows us to drill ourselves there for the first time. That's only had a handful of holes so far, so we're excited to get in and test that. And everything else we need to do just at the moment, we're in good shape. We have permits in hand. Same down at Poplar. Permits in place to do what we need. So we're not hindered by that. That's still, British Columbia gets a bit of a bad rap for permitting, but certainly for the exploration stage, it's very straightforward, and we've got good First Nation support, particularly from the Williams Lake Band, who are very commercial. So we're in good shape on that front.
How
What I
many
can
First
do,
No, go ahead.
no, I was going to say, and watch this space on Skeena. We've got some good news. The guys are doing some good work, and I think over the next few months we'll expect to have the bulk sample permit in place. So I'm getting to see, what you need to do there to win serious support for a mining project. I think BC is a great jurisdiction, and very importantly, it's a safe jurisdiction. No one's going to steal these projects off us, which is important if you think that the copper price is going to be much higher in 10 years' time.
How many of those groups do you have to get support from to move forward? Like, how many First Nations are you dealing with?
We've got two. The major one at Woodjam is the Williams Lake, Williams Creek band. So we've got support from those guys. Poplar's a bit more interesting. There's several there, including the Wet'suwet'en, but they've allowed us to get in and do our work there. So we're in pretty good shape on that front. Very good shape, I should say, particularly at Woodjam.
Good. Awesome, Craig. Well, I think we should get Steve on next time and talk a little bit more about the rocks. You seem excited about it. I'm not a geologist, but extremely interested in porphyry geology in particular. So thank you so much for doing this for now. What am I forgetting to ask you though? What should we be talking about that I'm failing to bring up?
Oh, what would I say? No, probably the key things, like look out for those mid-tier companies. I think, Skeena, the developers, Skeena, Vizsla Silver, clearly been on a run. Both of them have sort of doubled. If you look at Stephen Dean's Artemis, Dan Barnholden, my mate Dan now runs Luca Mining in Mexico. All of these sort of mid-tier producers, smaller producers, and developers have really taken off. I think over the next 6 months, as people take money off the table from the Cisco mining type acquisitions or takeouts, that money will start flowing into exploration and exploration stage companies. And I think, if you go back to the last boom, 2005, 6, 7, up to 2011, 12, 13. My observation was it took about 18 months before the explore codes really started to move. Well, we're getting close to that stage where, you've seen a doubling, you might see a tripling, you're seeing that M&A happening. The mid-tiers are starting to disappear, and money will start to trickle down over the next 12 months in the explore code. So I think we're off to the races. In 12 months' time, it'll be a very different environment where share prices will be much higher, and you've still got a bit of time to get set as an investor or a speculator and buy some of these companies like Vizsla Copper, which I'm doing myself as well.
Well, it does seem like Canadian mining needs saving at this time, and hopefully that's going to be the thing that saves it. But I appreciate your time, Craig. Thank you so much for sitting down with me today.
Yeah, a real pleasure, Antonio. Anytime you want me on, a pleasure. I love your questions. Love your show. Great to talk to you.